Now, firstly, I'm probably going to be saying this at the beginning of all these rants. This is not investment advice. This is my opinion. It's to give you ideas, to give you food for thought for your own investing. It's just what I think. So anyway, here goes. This is actually a UK market idea, but it applies to all markets and all assets. So charts are full of noise. And the FTSE 100, for example, has noise from foreign exchange, from international companies that are on there, so geopolitics. It has noise from arbitrageurs. It has noise from hedgers, because it's big and it's liquid. And if you wanted to, say, hedge oil and Swiss francs, you could probably find a way of doing it by buying some shares in the UK market and selling some shares in America or in Switzerland, etc., etc. So that market is very, very large, very, very liquid, and therefore it becomes a destination for people that are doing technical investment and trading things that doesn't really have a lot to do with the companies that underlie what's going on. So that injects noise. If you can find a chart which doesn't have that noise in it, you're in good shape to see what's really, really going on in the market. And for the UK market, that is the SMX, or small cap FTSE index. So take a look. So there you are. It's got hardly any noise in it at all. It just goes in one direction until it changes its mind and goes in another direction. It's not jiggy-jaggling around. And that's because the companies in it are small and expensive to trade, and who knows who they are, and they're not international, etc., etc. So they're not prone to arbitrages so much or hedges so much. They're just about the companies themselves, and therefore the index, which is a combination of all those companies, is pretty low on noise. So if you want to see what's going on in the UK market, there it is. That's what's going on. All the jiggy, joggly, wiggly, waggly stuff going on in the FTSE 100, that's noise interjected by international affairs. So it doesn't give you a UK-focused view. And you could apply that to anything you like. You could apply that to precious metals. You could apply that to the American markets. You could apply it to foreign exchange. So here you are. So now you're looking at this. You can see it dropped like a rock. And it went up like a rocket. And now it's stopped. Just stopped. Boom. So some process has ended. So you can tell what's happened. You can tell what's just happened recently. It stopped. It's waiting. Now, because the actual index itself is so noise-free, it will now travel in a very, very narrow band. And if it goes down by much, it's going to go down by a lot. And if it goes up by a little, it's going to go up by a lot. And if it goes sideways, well, it's going sideways, and you can just sit there and watch it and wait for it to break out one way or the other. And this is a basic way of trading and investing, is you watch something that's as dead as a duck, that's going nowhere, it's going sideways, and then suddenly, blip, it starts to move. And that tells you something's up, because most things that go on in the market are preempted by people with much better information than us. You can fill in the blank there, or much better tools than us, or much better market awareness than us, or geopolitical awareness. I mean, how many people know what happened in Alaska yesterday with Trump and Putin? Well, a few. Well, we haven't got a clue, have we, really? Not really. But anyway, the market will move in terms of what they found out, what they've whispered to people, and what the people who've whispered at, and you'll see it coming to the market. So right now, what you're seeing is very little movement in Bitcoin, which suggests that not a great deal happened. But we'll find out for sure on Monday. But charts will give you that insight, particularly in offbeat markets, because people know. I mean, all the employees know the company's good, or is going on a tear, or has had, bad luck, or is run by a lunatic or a genius. So, if there's a changeover and suddenly it ticks up, it will be because somebody, maybe a lot of people, know what is going on. And you can just look at the chart and go, oh, something's going on. And you can draw your own conclusions from that. So that's what I use charts for. And when a chart is going sideways, it means that it's got equilibrium and it's waiting for a new catalyst. And when that catalyst appears, it will appear in the charts. And this is a chart just like that. It's had its catalysts, and now it's sat sitting, waiting to move. And you can draw tight lines around whether it's going up or down, because there's not much volatility in there. It's very, very smooth. So the signal should be pretty clear and pretty near the point that we're at now. And then the move should be quite a long way. So you've got a forward indicator an advance warning, a canary in the coal mine about what happens next. And I'm a bull, but it doesn't mean I'm right about that for sure. But when it goes, then we'll know, won't we? So anyway, there's my little rant of the day. And the FTSE small cap is a great indicator for the FTSE 100, which is a big liquid market. And the same technique can be used in America, in Timbuktu, commodities, forex, you name it. You can adapt this very, very simple idea for your own investment and trading. Thank you very much for watching. See you again soon. Bye now.